Good morning, everybody. Good morning. Welcome, one and all. Welcome indeed. Hope you're doing well, guys. All right. Morning, morning, morning. Hope you're doing well, guys. I was thinking to myself this morning, oh man, it's Tuesday. Then I was like, hang on a minute. No, it's not. It's Thursday. Brilliant. 3-day week. I'm ready for the weekend already. Morning. Another beautiful day. I like that mentality. Yeah. I like that mentality. I need that mentality right now. I certainly do. Oh, Joey. That's the one, mate. That's the one. I've actually started to use it with a bit of real money as well now in forward testing. Yeah, it's actually mutated somewhat over the back tested results so far. It's actually mutated because it's not just a gap system anymore. Actually, it's gonna. I think I'm gonna send it out as a standalone full system for counter trend, trend continuation, everything. I think I don't know why I wouldn't, because the results in the back test so far, it's just been a no-brainer, So yeah, it is looking pretty decent. It is looking pretty decent. Yeah. It's super simple as well. It's super simple, so I like that. But you do have to be very, very good with supply and demand. And you have to get right on board with risk management as well. There's a lot more reliant on risk management than the sniper system. I have no idea when it's going to arrive, mate. Honestly, I have no idea. I have to make sure it's as good as it possibly can be before it goes out, and that's going to be weeks yet. And so, yeah, scaling in. You might even end up scaling out, possibly. I don't think I will need to, but yeah, probably scaling in. Yeah, most definitely scaling in. Yeah, but also scaling in such a way that you're not scaling in for like long-term trend continuation stuff. It's more around executing 0.5% before a certain level and 0.5% after a certain level, and letting the full 1% run and stuff like that. There's some areas yeah, it would be good. Well, this is another thing, Sam, as well. This is another thing, I've been looking at multiple time frames, but so far, the lower the time frames from the back-tested results I have, the lower the time frames, the worse the win-to-loss ratio is. Now, win-to-loss ratio doesn't mean anything, because at the end of the day, the 5-minute charts and stuff that I was looking at and the 15-minute charts that I was looking at, they're still incredibly profitable. So you still make loads of money, but you are winning probably about 40% of your trades, and you're losing everything else. So there's a very very strong mindset that the trader will need in order to use it. Loss after loss after loss. If you can imagine, when I post trade signals, right, or when I used to post loads of trade signals, right, like there used to be quite a few winners. You get the odd loser, but generally speaking, there'd be winners, right? So you can basically say goodbye to that. If I was posting as many trade signals on this system as I was the last one, we probably wouldn't even have a trading room anymore. Because people who are signal hunters would come in here and they'd just be like, this guy's losing all of his signals, and start that thing. But yeah, so you do have to get ready if you're trading it on like a low time frame, like the 5-minute and the 15-minute time frames. You are going to have to get ready for a serious amount of losses. The thing is, when you lose, you're losing tiny amounts. Okay, super tiny amounts. When you're winning 5-1, 10-1, 15-1 risk reward to risk. Okay, so I mean the risk reward is incredibly good. So you could lose 7 trades in a row, for example, win 1, and you've made money. It's that kind of system. No, generally not fixed stop loss and TP levels. No. I've been trialing things with a whole different variety of tools. Trailing stops are actually an amazing thing with it as well. As far as I've seen so far, trailing stops work really, really well with it. In terms of target profits, generally speaking, it's been between supply and demand zones that I've been targeting, and letting the trade run on, just having no TP whatsoever and waiting for price to break and close back above a certain level. If we cross down 6 supply and demand zones, if it gets a BCR back above one of the zones, like the last zone, for example, I'll just be out and I'll cut the trade off there. So that's the kind of thing that we're looking at the moment. I will just show you quickly. So this is basically what it's designed with, right? So I've basically got a cloud series, cloud EMA group, 26 EMA and an 8 EMA, not a 21. Also using a twin split 200 EMA for the color change there. And essentially, the idea is you're just taking shorts below and longs above, the fundamental basics of using a 200 period moving average, and you're just literally shorting and longing exactly when it tells you to. That's it. That is literally it. That is the system in a nutshell. So, i.e., I would take a short here, and I would add to the position once I got a break and cross under the 200 down to there, right? Then I would take a long here and add to the position above. I would take a short there at full risk, straight the way down. I would take a long there, exactly when it tells me to the top. This area here is where supply and demand zone is going to come into play. Now, supply and demand, we need to have a super good understanding of, because we need to be able to establish what kind of market we're in. Trending, ranging, quiet, volatile. We need to be able to look at a chart and be able to determine what market state we are trading in for that period. Okay, so that's where we're at the moment. But as you can see, I mean, just from this one pair, just from this little bit of price action, there is a lot of opportunity. So, I mean, if you short there at 90.95, you're taking profit down here at 87.16. You're taking short there at 87.70. You're taking profits down at around 83.40. You're taking a long here at 84.50. You're taking profits up there at 89. So, and the list goes on. I mean, it's just giving us a short signal right here on this candlestick. So I'm just going to wait to see where that one goes, But NZD CAD is where I'm at on the list. So I've done an incredible amount of work so far. I've gone through the entire list, even backtesting things like ridiculous pairs like the Euro Hong Kong, for example. Things like the Euro Hong Kong have been okay time to time, but you lose so many trades. There are a ton of losses. But what I can do and what I have done in terms of the backtesting to significantly and dramatically raise the win to loss ratio is using the 200 EMA. So all of these long signals, you wouldn't buy any there. Okay, all you would do is you would take the shorts. So every single time you see a short underneath the 200 EMA, you would short the market. Okay, or you would literally just hold on to it. Your exit strategy would be a break and a close above the 200 EMA. So say for example you short it around this cluster here at 89 or at 9, you'd probably come back down here and you'd get out there at 870, you know, something like that. So that's the way it's been so far. And then you'd go long once we get the breakout of the 200 EMA, and then you go long from 861. You take your profits up there at the short signal at 917. You take your long there at 909. Take your profits there at the short signal at 945. And you're just consistently doing this. So, you know, you're looking at about, what's that, 3,400 pips. You've got about 6,000 pips here. You've probably got another 2,500 pips down to the downside. So, yeah, I mean, it's really, really, really decent. It's pretty damn simple as well. The only thing you guys are going to have to seriously brush your skills up on is your TA, because TA is going to be very, very important. Being able to establish where the market is in terms of its market state structure. So that's trending in volatile, trending in quiet, ranging in volatile, ranging in quiet. Okay, and you're going to have to be able to tell when you're entering into an equilibrium zone. You're not going to want to take shorts at the lows and longs at the highs and stuff, which this will tell you to do sometimes. You're going to have to ignore it because of the fact you've got big technical levels either side of price. Yeah, involves the ATMA gap. That's what it was built from. That's what it was built from. The only reason I've been now changing my criteria and backtesting rules and stuff is because of the fact that I was seeing quite a few trades where price actually changed in the trend. So price would break above the ATMA and then it would the trend would change. And I ended up staying in trade ideas and getting like 20 to 1 and 30 to 1 risk reward ratios that I never knew I could have had. So there's the ATMA gap part as well. It works exactly the same. On a 15-minute time frame, you wait for a short signal, you take a short on the 15-minute time frame when there's an ATMA gap, bang, price back down to the ATMA in the daily time frame. You just done yourself a gap trade idea, and it gets you in way earlier. Instead of getting like 1.5 to 1s, you'd be looking at 3 to 1s on average. That's like the average as well. So how am I going to name the system? I'm gonna I don't know. I could definitely have some fun with that, couldn't I? I'll probably call it the Grail Sniper, the Holy Sniper. That's what I'll call it, the Holy Sniper. Snacks. So yeah, that's what I've got going on at the moment behind the scenes. Not so behind the scenes, but yeah. All right, guys. So yeah. So long as you can get your head in check. So long as you can. Hang on a minute, Sam, don't start with me this morning. I didn't have a lot of sleep last night. You got double charged. What about triple charge? Well, yeah, let's get cracking on then. So first of all, we have the Swissy continuing to rise to the upside at the moment. Still grinding higher. Not really in conjunction with any kind of risk on or risk off themes. I mean, the stock markets at the moment are still very much bid. At the moment we are looking long, green and strong. We've come down for nice price action pullbacks, but we are still very much heading to the upside on all of these stocks at the moment. Looking really good today. So looking at this, looking at that kind of thing. The Swissy is still rising against the odds. Probably expecting some Swiss weakness, but no, not yet. Got a golden cross there on the 4-hour time frame as well, so I would expect that one to continue rising. We've got the Canadian dollar here. Again, continuing to rise. Had a nice price action pullback. Didn't quite retest that 7060 level, unfortunately. But again, guys, 4-hour time frame for me. We're going to look at this continue rising today. Forming, we actually just have formed a high. So yeah, we just actually have formed a high over the last couple of days. So yeah, that one's going to continue. Target for this one is 711.70. The Australian dollar yesterday was expecting a nice push down to the 8 level. Was that yesterday? When was that? Yeah, so unfortunately in the afternoon we didn't quite get there, did we? Missed it just by a touch. Went up to the moving averages again, and now we're kind of just grinding along sideways. Australian dollar's looking rough. Yeah, Aussie dollar's looking very, very rough at the moment. Trapped between the supply and demand and the moving averages, the top of the supply and demand and the moving averages. So it's got no path of least resistance. Wait for that one to get a breakout. Okay, wait for it to break and close above the averages for longs. Wait for it to break, close, and retest the supply and demand for shorts. New Zealand dollar yesterday actually got a bullish breakout of the moving averages, came right back up to this supply and demand zone before getting a retest of the 50, which is currently underway. Again, this is a rock and a hard place, guys. NZD is not looking great either. You know, trapped between these two areas at the moment. It's not really a great deal that I want to be talking about in this currency at this stage. A breakout above 768 is going to be pretty decent, you know, for longs. If you want a short BCR of 762, that's going to be heading back down to the low of 756. Probably going to provide you shorts with maybe 50 to 60 pip trade ideas. The breakout above longs is going to probably be more, just because of the fact that we've got a nice path of least resistance straight away up to around this level at 771, which is going to be, I'd say, about 150 pip trade ideas, dependent on the pair that you're obviously trading. The euro at the moment, guys, has finally found a base of support at the 200 EMA. We've got a really nice surge of momentum this morning as the euro rises. So the euro is looking very good at the moment. We are still trading between the moving averages on both the euro and the United States dollar, which would suggest that we need to see a breakout again before we get any kind of directional bias confirmation. So breakout above the 50 for longs in the euro, breakout below the 50 in the United States dollar for shorts. We've got the pound as well, which is coming back down for a really strong retest of the 200 EMA. At the moment, this is not, I'm not going to say that the pound for me is going to be short today, because we are only carrying out a BCR of that 200 period moving average. Now, this afternoon, when I get back to the screens, there could be the possible opportunity here of shorting the pound if the pound retest fails and we actually end up trading lower than those moving averages. But at this stage, that's not what's going on here. It's just a retest of the 200 EMA, and quite a volatile one upon the market open. We've got the Japanese yen as well down here, which is the last one of the group. Trading lower. We are against this low here at the moment. If we go on to our weekly time frame, we have officially closed up that ATMA gap. This is a nice BCR of the supply and demand zone as well. And the weekly shows really well what's actually going on here, because we've got a BCR and a potential continuation to the downside. So the Japanese yen for me is going to be very much short for the foreseeable. Okay, right the way back down to 595, which is going to provide some pretty decent opportunities as well. So over to the commodities then. So we've got gold at the moment, which had a really nice rise yesterday from those moving averages. I think for me, gold at the moment is going to probably continue trading higher. If I'm correct about the United States dollar trading below the 50 period moving average, and this is on that proviso, okay, if the United States dollar does not break out of the 50, then my bias will not be the same in gold. But I would think that gold is going to probably trade higher off the back of the dollar weakness. We have got non-farm payroll tomorrow as well, guys. So remember that any trade ideas that you take today, if they are not completed today, you are running a massive risk of the fundies giving you a volatility strike right through the stop loss tomorrow. So at the moment, gold's looking pretty good. We have got a level of resistance up at around the 1796 to 1798 level. But if we can get a breakout above that one, then absolutely, you know, good news. We can then look at a continuation in gold back up to one of our levels up here. So just look for those like predominantly major supply and demand zones. You can always find these just by clearing out the noise and going to your daily time frame. So for example, the 1 hour looks choppy as hell, but on the daily time frame, you can actually see that there's quite a well-established zone which lines up at around this level here. So that one running right the way through there. Okay, get a nice price action floor. We get the pullback here. We get the retest here, the continuation. We get the BCR continuation to the downside. So that's quite a nice established level of supply and demand. And that's the one that I'd be using for a target profit. Now, on the daily, interestingly enough, we are still trading between these moving averages. So if you want to be looking at a trade idea back up to 1850, you are going to have to wait for the daily break and close above the 200 EMA. Okay, because we are literally on top of that 200 EMA at the moment. It's not trading above it. It's not trading below it. It's literally trading on top of it. And in order to get that confirmation bias to take the longs there, we are going to have to see that break and close above to give us the path of least resistance. As far as copper goes, we don't have an ATMA on there for some random reason, which means I don't know where the gap is. So what I'm going to do is I'm going to copy and paste it from crude and stick it on copper. So copper right there at the moment actually came down to close the ATMA gap. It's coming up to previous highs at the moment. Definitely an area of resistance. Can't say it's going to be a breakout today, but certainly copper trades higher for me. So I have got a long bias on that one. Looking at platinum at the moment, I've actually got a long bias on that one as well. So I think all of the metals at the moment, guys, all the flat commodities are definitely looking for a rise to the upside. Natural gas is like basically not being traded at the moment. We've got hellishly low volumes. I mean, if I had to absolutely, choose a bias, life or death, I'd probably have a long bias for the sake of the fact that we're trading above the 200 EMA and we've been trending up now for quite some time. But guys, I mean, seriously, there's like nothing going on there, so I wouldn't touch that one at all. UK Brent and US crude both trade higher for me. So we did actually get up to our 70 level. Excuse me, yesterday at 3 o'clock in the afternoon. Well, actually, 10 o'clock in the morning. Yeah, we basically leveled off at around that 70 level, didn't we? But I'm still looking for that continuation. So UK Brent back up to 73. And US crude to the top of the supply and demand at 67.30. We've got a BCR of the US crude's 50-period moving average. And we've also not got a BCR of the UK Brent. So out of these two, I'd probably be looking to trade US crude over UK Brent because of the fact that we've got a cleaner setup. Okay. Onto the stocks then. So stocks at the moment, guys, incredible power out of the US 30 Dow Jones, trading up against all-time highs at the moment. All-time high came into play yesterday at around 34.35. No, sorry, what is it? Sorry, no, I was right. 34.35. All-time high for the Dow Jones. We are trading up at around this level at the moment. Definitely finding a little bit of resistance there, but honestly, guys, there's no reason why this can't continue. So I'm going to have a long bias on the US 30. All of the European indices at the moment are looking fantastic. We're definitely coming into some areas of resistance on the Euro stocks. The CAC 40 index needs to come back down to retest the supply and demand, which it technically has in the 15-minute time frame. UK 100 still trades higher. We've now got a breakout of this ascending level here as well, which is quite an important level in the longer term technicals. So now that we've got a BCR above it on the 15, which doesn't really count for a great deal, but we've still got a BCR of it on the 15-minute time frame, I would look at the UK 100 trading higher. We've got the DAX index as well, team here down in the bottom left, which is doing incredibly well at the moment. DAX for me trades higher, looking for this ascending level at approximately 1540. China 50, not really doing too much of anything. I don't want to get caught and trapped in any of this kind of volatility and these shakeouts that we're looking at in the market at the moment. This one primarily, this is the true volume, okay, of what's going on. These market open breakouts and session breakouts and stuff, not worth it, right? But this is what's really going on in the China 50, completely and utterly flat. So don't trade it, it's not worth it. And finally, NAS 100, the US tech, doing incredibly well at the moment over the course of the last, I would say, 12 hours or so. We've had some really, really nice deep swings in this one. And at the moment, following a huge tumble off, I would expect this one to actually start trading higher again. I really would. The stocks are incredibly corrupt, one of the most corrupt asset classes in the world. And I would buy the corruption. I really would. I would be on the side of corruption long. Long corruption. That's what I would do in those. That's what I would do in those stocks. And that brings us to Doge, which is now trading up at highs of 68.75. Can you believe it? 68.75. I saw a post from Calvin earlier on. $1,000 in 2021 January is now 121,000 pounds. I'll tell you what, it makes me wonder what we're bloody doing. This stuff is nuts. 121k return on a grand investment. Just incredible. Absolutely incredible. Imagine if I stuck 100 grand in there, I wouldn't have to work ever again a day in my entire life. Makes me sour. It's just crazy, isn't it? It's absolutely crazy. But if you did, it would be. But if you did it, would be trading in. You would have to be mad. Yeah, you would. You would, yeah. That's the thing, isn't it? It's all good and well thinking, shoulda, woulda, coulda. But in January, I was laughing with my buddies about this. So, more for me, more for me for laughing at it, because I guarantee you somewhere in the world, someone would have taken a massive punt on Doge, and they would have earned millions. I guarantee it. Someone somewhere would have, definitely. And he's sat there now in his beach house somewhere, living it up, And I'm getting told I'm ginger every day. For peanuts. So, more for me. Yeah. 280,000 coins and sold on the day before it spiked. Yeah. There's over 1,000 wallet holders with 1 million in Doge now. Yeah, man. Yeah. Well, it's crazy. It is crazy. So yeah, Doge trades higher. I think we're going to go for a nice deeper corrective, retest the supply and demand it around 44.80. But Doge trades higher. I really think. I think Doge is going to carry on. I really do. I think it'll come back, Nancy, to around the 40. Yeah, around 44 cents. I think maybe 40, somewhere around there. If you think, because supply and demand structure doesn't matter the asset class, it's market structure, right? So if you think this level here, that's your supply and demand zone, right? In Doge, it's the first major price action pullback. And so in a trending market, theory would state that price action is going to come back down, retest this level at 45-ish, and then continue north from there. So that's what I'd be waiting for. I'd be making this area in here my buy zone, if I wanted to get back involved in that one. What's the other one we're looking at as well? This one's not doing anything at the moment. It's completely flat. But I am waiting for that one to go again as well. XRP, yeah. Let's have a look. So yeah, Ripple, yeah, doing very well at the moment. We had a really nice pullback down here, and then away this has gone. Got some levels in here as well for targets. That's doing very well. There's a lot of people, like a lot of pros in the industry, that think this is going to be the new Bitcoin. That's what they think. They think Ripple's got a lot more potential than Bitcoin has, and so they're all getting their mouths wet on Ripple probabilities at the moment. But God knows, I don't know. I just buy the things and hope for the best. No system, no strategy, no risk management, just bloody. It's like this, isn't it? Am I going to win? Am I going to win? Am I going to make loads of money in Doge? Cannot predict now. My 8 ball's out of juice. It's out of juice. Yeah, man. Right, Dan, no more. There's underage individuals in this room, mate. Oddly satisfying. Oh, please stop, mate. Oh, right. Okay, well, now that we've had an oddly satisfying 8 ball noise, we can get swiftly moving on. So cryptocurrency is basically just buy them and hope for the best. Professional view. And let's look at some FX pairs. Euro yen. Oh yeah, Euro Oz as well for Ivalina. Yeah, I will check that one, Ivalina. Don't worry. So Euro yen at the moment trades higher, guys. You think about what we've just been looking at. Euro trading higher, the yen trading down as well on the weekly time frame. Just got that BCR. Euro yen trades higher, targeting 133.051. If you, it doesn't really matter if you're trading it on a 15-minute time frame. The same exact rules apply. Euro yen long. Wait for the golden cross there on the 50 and the 200 EMAs. That is your eventual target. You could be looking for a late entry criteria. Okay, so when price comes up to this level here, waiting for a breakout of that and then taking a trade up to 133 flat. I do actually quite like that level there. I think that's going to carry. I think that's got some significance to play a role in down here as well. Yeah. So yeah, I do actually quite like that level at the moment. It's a nice little channel. So let's say Euro Yen, we get a breakout of this little channel that we're trading in at the moment. It's not really significant, but you know, still break, close, retest of that one, and then straight up to 133. That would be my buy to the Euro Yen. Let's have a look at the Euro against the Australian dollar. That's fine. Okay, so any advice about EA? How could I have taken the trade below the hour for 200 EMA? I was looking at the 15-minute time frame death cross, then BCR. Death cross. Well, first and foremost, Evelina, this is a range-bound market. Okay, so we don't give the moving averages much bias at all. The 200 EMA on the 4-hour time frame is not going to come into the equation because think about the size. Think about the size of the range we're in. Okay, the range in the Euro Oz at the moment from that there down to the low is 100 pips. 100 pips in the Euro Oz, you can do that on a 15-minute chart and a few candlesticks if it really goes for it. Okay, so 100 pips is nothing. 200 EMA on the 4-hour time frame is not even going to come into the equation. If you're looking at a death cross on the 15-minute time frame, you just simply take the trade. So as soon as the criteria come on side, you can execute. Let's say you've got 10 to 15 pips, let's say, just as you get through the 4-hour 200 EMA. You could execute a 0.5% before the 200 EMA, and then another 0.5% you could execute just literally when you get the break and the close underneath. And then just take the 1% down to that level there. The alternative view is that you wait for price to be trading beneath the 200 EMA on the 4-hour time frame and take another trade. Because if you look on the 15-minute chart, right, this area here, okay, this price action pullback, that is when this candlestick is closing under the 200 EMA. So the price has come underneath the 200 EMA already on the 4-hour time frame before you get that price action pullback. Then you get the price action pullback, which is the next candlestick, and then we continue down, okay? So this is all happening whilst the price is trading below the 4-hour 200 EMA. So you can execute your trade idea, let's say at around 155.26, and because of risk management, you're taking less pips, but you're doing exactly the same amount of cash, okay, back in the account. So that's one way you could do it as well. I mean, you're still looking at still a 40 pip trade idea there, you know. Yeah, no worries. Dan, can you check the Aussie NZD, please? Looking to take it up to the upper limit of the trend. Prices over the 200 EMA on the daily. Okay, cool. Yeah, Aussie NZD. Okay, so we've got looking to take it out to the upper limit of the trend. Yeah, you're looking at that level there, aren't you? Yeah. So about 950. Yeah, yeah, that is the same level. Yeah. Yeah. Yeah, I like that as well. Definitely want to see a breakout above the supply and demand zone. I mean, we have seen price action come and fail at this zone quite a few times in the past. We have had two breakouts, agreed, but we have seen it fail quite a lot of the time as well. And it's not failed small, it's failed big. I mean, these are big swings. You'd have to have a whopping old stop loss to be able to save yourself from that. 150 pips in the Aussie NZD. That means your 150 pips from there is going to be down here. And if you're trading down there, you don't want to be in the trade long. You want to be in the trade short. So I don't know how I'd structure that one, honestly. I think I'd probably wait for a daily break, close, and retest, a 4-hour continuation from that supply and demand zone there. I really would. I really, really would on that one. And too many failures to break and close above this zone. Too many. So if I wanted to take this one long, I'd have to wait for the clear path of least resistance, which would be above that supply and demand zone on that one. Yeah. Sam, can you check the Euro USD? Sorry. Oh, yeah, no worries. No, it's all good. Looking at 122.20 for the TP following a 4-hour BCR with a 1-hour continuation. Okay, cool. Let's check it out. Okay, so Euro USD 122.20. 122.20. Hmm. 4-hour BCR with 1-hour continuation. Yeah, I like that. Yeah. Yeah, I like that. Yeah, that's fine. Yeah, that's fine. I like that one. Euro USD, breakout above the 50, BCR, 1-hour continuation, straight up to 122.20. The only thing I would say is my supply and demand zone personally tops you out at around 121.80. So possibly just be aware of that. Not to structure your trade around it, because you will obviously have different analysis, but just structure your trade around it. Don't structure your trade around it. Just be aware of it. Sorry. Oh, guys, did I tell you I got one of these? I know I told you I bought it, but I actually took delivery of it. So I know a couple of you guys in the room have got one. I haven't had a play with it yet, so I don't want to know anything about it either. I've done my homework on them, but I want to find out everything for myself. With all due respect, one of those little things. So yeah, it's pretty cool. My ledger. Yeah, the Nano X. One of those things. So yeah. Store the mills, yeah. Well, remember, my whole crypto portfolio is free. It's completely free. Because of Doge and Ethereum, I literally took out my entire initial investment. I more than doubled my money, and now I've got a free cryptocurrency portfolio. So I'm literally it's decent. It's actually it's turned out brilliant. That's what, sometimes you win, sometimes you lose. Same as a roulette wheel. That's exactly what I did. It's all about timing. That's what it was about. It was all about timing for me. But yeah, so now I've got an entirely 100% free crypto portfolio, which is now going to be stored on my ledger, Nano X. So yeah, it's decent. Second hand. Yeah, mate. No, I didn't. No. I tell you what, me and Andrew had a conversation about this because Andrew was like, yeah, but I don't want to wait weeks to get my ledger. And I was like, mate, think about buying it off eBay, right? If you buy one that's sealed off eBay, they could have put anything in there. You plug it into your PC, bang, they've got access to everything. You know, we weren't born, there's no way, man. No way we would have done that. We weren't born yesterday, mate. We've been in this game a long time. There's no chance we were doing that. Max, sorry to be a nightmare about it, but on the new system, are you still going to include currency indices? No, I don't. The currency indices, you got to think, right, buddy. You know what I'm trying to achieve with this new system is as much simplicity as possible. Like as much simplicity as possible. You know, it is just going to be, you know, longs, shorts, longs, shorts, longs, shorts. The only thing that's going to change is your risk management. It's a system that is going to be run entirely by risk management. Yeah, with the sniper system, you can just risk 1% and be done with it and make money. It's very simple in that regard, but then you've got so many damn entry criteria around it because it's a very, very conservative way to think about the markets. With this system, there's basically no entry criteria. Just do what the system tells you to do, except everything on the risk management side of things changes. Maybe, you know, you've got to think about trailing stops. You got to think about your stop loss and target profits and how you want to structure that before you've executed the trade or after you've executed the trade. You might want a trailing stop. You might want to change your TP. You might want to remove the TP. Maybe you're going to take money away, add money in, averaging up, averaging down. You know, it's a bit of a risk management like heavy system. So yeah. But yeah, anyway, let's have a look at Euro NZD. Yeah, Euro NZD. Warm and fuzzies. Kenya, nobody's having it yet, mate. Nobody's having it yet. You can backtest the system once it's been released. Like I will want everybody to backtest it once it's been released, because then people can find flaws, find bugs, and stuff like that. But I'm doing the work first of all before it goes out, because that's the way. That's the way it is, isn't it? You know, it's like me coming up with something super simple before I'm even backtesting it, and then just saying, "You do the work for me." You pay us for a service, so I'm going to provide that service to the best of my ability. So Euro NZD at the moment trapped between. Again, this is a rock and a hard place. You know, we've been trading between these supply and demand zones for a while. We did have an attempt to break out down here, trading right back inside it again. So Euro NZD for me trades higher. Target for this one is 168. Okay, for the Euro NZD, and that is not rocket science. That is simply based on the fact that 168 is attracted price action and is a big pocket of liquidity, and has been since back here on the 16th of April. Okay, huge pocket of liquidity, that one. So yeah, just wait for price action to get back up there again. It could be coming for a retest of the averages for a continuation to the downside, but it doesn't matter at the moment because we've got this supply and demand zone directly underneath price. Ultimately, this was my target, but as you can see, price action actually came back down there on the 24th of Feb, hit my target, and has then been trading to the upside ever since. So I'm just really, really being patient with this one at the moment. Get a break out of the equilibrium zone that we're currently trading in, then we can start talking about the Euro NZD, okay, for trading opportunities. Morning, Max. When do you think it'll be ready? Graham, good morning, buddy. When do I think it'll be ready? Not for a long time. Well, actually, no. That's relative. When I say a long time, I don't actually mean a long time. It's probably like a few weeks, away. But the thing is, mate, I've got to record videos on it. You know, I've got to do video shoots on it, and that process takes a lot of time. So, you know, there's no point me sort of teaching you in live streams. I'm going to have a whole video module on it so that you can learn it and then go and back test it yourself. I mean, the video series probably isn't going to be that long, but still going to be done. Right. System. Yeah. Well, 9:45. I'm probably going to wrap things up there, to be honest. Will you still be doing the current system? Yeah, absolutely. Yeah, definitely. Yeah, Dan asked me this yesterday, I think, about whether or not I was going to, pack it in with a sniper system. But everybody in this room, be confident, I will never be packing the sniper system up, ever. I will never be packing it up, because at the end of the day, guys, this system makes a lot of money. So why would I? Why would I? It's a really well-established system. It's been profitable throughout a world pandemic and for the last 5-6 years before that, and probably the years all the time before that we backtested, which it was profitable. I mean, there's never been a market cyclical event that it hasn't made money in. So why the hell would you ever want to change that? Why would you ever want to remove that from your portfolio? It's very powerful. And the great thing about it is it's a way of thinking about the market, Sam. I would quote you back here as well. And when you say it's, when you said a while ago, it's not just a system, it's a way of thinking around the entire markets. And it really is. It is a way of thinking about the markets. And I love that. I love that thought process, because if you think about it, how many times, we talk about biases, we have those technical directions on things. And how many times do they come out? I would argue the win-to-loss ratio in terms of bias confirmation is astronomically high in terms of it telling us, which direction we think price is going to go in, just by using the tools in the system, moving averages, supply and demand, looking at the indicators for our buy and our sell signs. It's just great. It's just really, really good. Even though I don't use the indicators personally too much, but that's because I've, as you know, already done my time in the trenches. So yeah, no, I won't be getting rid of it. This other thing will just be this other thing will just be another standalone system. One has a high win to loss ratio, but it's an absolute pain in the ass for entry criteria. The other one has a low win to loss ratio, or a lower win to loss ratio, and it's very profitable as well. There's no entry rules, but more risk management. So 15-minute time frame, for example. If you look at any of these trade ideas, right, guys? This candlestick is a long. Okay, so that's a long right there. So you've longed at 932.60 on this candlestick. Okay, so we take a long there, and you just stay long, right? You'd stay long. You can either get out of the trade idea when there's an ATMA gap. You don't want to, you cut your profit there. You can look at previous highs, previous lows as supply and demand zones. You can really look at price action and look at what price action is telling you. We've had this nice surge to the upside. This candlestick's pulling back. Okay, I'm going to take my profit. You just done yourself 250 pips. Okay, if you take this short idea here, you would have been stopped. You would have taken a loss, like a 20 pip loss, when you looked at the long signal here. If you took this long signal here, you would have made literally nothing and probably taken a loss when you got this signal here. This, again, would have been a loss. So this, again, would have been a loss. This here would have been a massive win. Okay, so you've got one winner and another winner, and you've got 4 losses in the middle, right? But because your stop loss is so tiny, every single time you're literally like losing minuscule amounts, these 2 losses are going to be like 10 times, these 2 wins, are going to be 10 times the loss of these little ones here. You see? And that is literally the way you need to think about it the entire way through. Yeah, that's right, Dan. Yeah. The lower the time frame, the more the noise, the less the signals work. Yeah. Yeah. So you get more losses on the lower time frames, but because of your risk management, you make an amazing amount of money. It's open to discussion, Joe. it's open to discussion, mate. I'm not even going to put things like that in the rules. You know, I'm not even going to put things like that in the rules because that's subjective. You know, you've got to do what you see as fit at the time of taking that trade idea. How am I going to be able to teach you guys? Oh yeah, you know, when the market's coming up to an area like this and we form a lower high, if it's got like a 10 pip gap, then take your profit. You can't teach that. That's market intuition. That's chart time experience. You know, you've got to understand price action. You've got to understand supply and demand and look for those key areas and stuff like that. It's something that can't be taught physically. You have to just be at the screens and review price action all the time. Will I be streaming using the different systems? I don't really know, mate, to be honest, Ivan. That's actually a really good question, Ivan. I don't really know, to be honest. I mean, using this to analyze the markets, I don't really know. You know, and using this kind of analysis, this relies on nothing, really, does it? I mean, you know, if I looked at the Euro Hong Kong, you say, what's my bias? Well, I'm going to be short. You know, there isn't really going to be too much like that I can say about the markets. Like, you know, we go short at this level right here and we take our profit there. We go long at the market here and we take my profit there. You know, we go short the market up here and we take my profit down here. So if you think about this one, for example, okay, you're short there. You take your profit here. You've just done 650. Okay, 650 on the first one. You've done yourself another 174 on the second. You've done yourself another 290 on the third. And then in these areas, you will lose. Actually, no, you might not lose that one, to be fair. But you'll have 4 losers here. And you would have won probably like 10, 15 pips. Then in this one, you would have won a couple of hundred. Then lose. And then you would have won another couple of hundred. Okay, so you've done, you know, quite a few. You've done probably about, 1,800 since, let's say, since the middle of the night on the 30th of April. You probably would have done about 15 to 1,800 pips on that, just for the sake of argument. But remember that you've won 1, 2, 3, 4, 5 trades. You've won 5 trades and you've lost probably like 10 or 8 maybe. Yeah, like 8 trades you've lost. So, you know, you're going to have to get your mindset used to that. You're going to have to. It'll be a massive learning curve for me because that's just not something that I've ever done. It's not ever something that I've had to do. So it's going to be as much of a learning curve for me as it is you guys. It really is. Yeah, it's mechanical. Yeah, it's very mechanical. Yeah, it's fully mechanical. It's just an EMA cross. And that's all it is. It's just an EMA cross, but it's a groovy one. Because I used loads and loads and loads of EMA crosses, but I didn't really like any of them. For the visual aspect, I didn't really like them. They weren't clear enough. So I wanted something with really nice, clearly defined long and short signals on there that you can just literally look at, and it's just bang. I'm going to do that there. I'm going to do this here, that there, this here, and so on and so forth. Yeah. Yeah, mate. Yeah, this is being made for you. This is not being made for me. I don't need another system. I mean, I'm going to use it now that I've been doing it, but I'm doing this all for you guys. This is not a personal project. This is something I've put together for the purpose of for the trading community. So just a different aspect of the markets, you know, different aspect of a different strategy, different aspect of trading. All right. Right, guys. I'm going to wrap things up there. 10 o'clock. 10 o'clock this morning. Been a long one. So I'm going to wish you all an absolutely wonderful day. And yeah, hope all goes well, team. It's been a pleasure as always. Look forward to catching up this afternoon in the US session. So take care, guys. Good luck. Trade safe and all that jazz. And I'll catch you later. See you then.